Hello and welcome back to my channel, Martin Day Trades. I am Martin Gonzalez, and in today's video, I want to go over my losing trade. However, I learned a lot from this trade and I can win, I can lose. Right now, I've been in a losing streak. I should have covered my loss by moving stop loss to break even. However, my trade never got to TP1, so didn't have to move my stop loss to break even, but soon as price got to halfway towards my TP with today's price action, I should have just closed my loss at break even and looked to have gone in a little lower where the trade entry was. I'm going to show you guys that. Remember, things not easy. It's you get better over time. You start having intuition. You know where the liquidity lies. At this point, it's just making sure that time, either 9:30 or 10 a.m. Eastern Standard Time, or the other confluences align with where you think the entry is going to be, where you think the volume is going to come in, where price is going to have a reaction from and to. So I want to just show you guys my trade. It wasn't a bad trade idea. It was more of a choppy day, slow day. I could have risked 50 points and had taken a loss, but I want to show you guys this on the charts. So let's take it to the charts. Okay, now that we are at the charts, I want to show you guys today's price action for YM1. Let's see. So this was Friday over here, and there was a retracement. I did a Fibonacci from this low. Ooh, that didn't work. Okay. To this high. And I figured price could come down to this 38% fib level. However, I saw a fair value gap right here, and I was like, well, on I think the hour, yes. So from right here to right there, I was like, price could come into that zone and have a reaction, but it actually ended up coming. Yeah, that's a 1 hour fair value gap, but price didn't respect the fair value gap, and it did respect the Fibonacci from this low to this high. There was a continuation level right here at the 38% at 44,221. You can see that it had a reaction right there, and the Asian session low, which is right there. Asian session low was the optimal trade entry where the liquidity lied, where there was an automatic reaction right here to back up. So this was my trade. This is where I ended up getting stopped out a little later in the day. You can see that I almost got stopped out right here. Price came down to 44,193, and my stop loss was at 44,197. So that's almost 5 points away from having gotten stopped out. I was looking for a 1 to 2 and never got to this level. So I'm just gonna delete that and show you guys where the trade could have been to have gotten in for the trade. So at this point, at the either the 38% continuation level or this Asian session low, which I think would have been a good entry right there, 50-point stop would have been more than enough. And targeting probably this London low, that would have been a 1 to 2 right there. That's a good trade from here to here. From there to there. Or taking it to the 1 to 3, risking $100 to make $300, that would have been a valid play right there off this Asian session low. Now let's go to the 38%. That would have not, I can't tell later. That might have gotten, it depends on how much volume and orders, it could have been filled. Could have not been filled. A 1 to 3 if you got in right at that level, but let's say you did get in like 1 point lower, like right there, this would have been a valid 1 to 3 play right there. The next move was from this London low. Could have traded this London low to this Asian session low. 50-point stop for a 1 to 2. That could have been a trade right here from right here to right there. It would have, taken a while to have gotten to that point. Or, from this Asian session low to this high up here, even a 25-point stop would have really, like, I don't usually like you doing 25-point stops, but that would have been almost a 1 to 10 right there, close 1 to 9 for sure to that Asian session high. Let's do 50 points. That would have been a 1 to essentially 4.5, we'll just say, down here. Little more than 1 to 4.5. So, which would have lasted, it's a 30-minute chart, so 1 to about 2.5 hours for this trade to have played out. It happened later on in the day, but remember, guys, just because it's 9:30 doesn't mean that's going to be the optimal trade entry at that time. There's more. It's going to be likely that price is going to, like on these choppy days, go towards a point where there's some liquidity, and then it's just going to range back and forth to these highs and lows. You guys can see this. So yeah, I took a loss today, guys. There was multiple trades that could have been played out today. This one right here, a lot of people took the shorts this morning at 9:30. Came back up for a retest. So remember, guys, I was telling you guys this in yesterday's video. You can see that the momentum at 9:30 pushed down, right? And then there was a reaction to come back up to fill this fair value gap. And I want to show you guys this, that aligned with the Fibonacci as well. But it got into this fair value gap a lot cleaner. So this is a fair value gap. It was created from that 9:30 move down, created a gap. The next one came down even lower, closed. So now there's this wick and the top of this candle up here. So anywhere in here, price could have came into. Now, if we do a 50% Fibonacci retracement tool from that fair value gap box, you can see that it almost tapped that 50% level. So what I want to show you guys is if you went in for the shorts, anywhere in this area right here, you could have used a 50-point stop at right above those highs right there. It could have been at any one of these points right here, and looking for a 1 to 2. Yeah, a lot of people caught this trade right here. I know Andre right at 9:30, my mentor, I think he got in at this push back up. So he got in around somewhere right here, and he had definitely a clean trade. But if you wanted to have waited for that retracement to come back up, and even the 50% right here, if you got in at the 50%, 50-point stop, you would have had to wait a little bit longer for this trade to play out, but it would have played out right there. So this would have been the 50% entry right at this bar candle. You would have had to go through some, some drawdown, some profits, but as soon as price came down, would have just been a really smooth day for that trade. And that's, you wanted to see where momentum was going, right? So momentum came down, and then, well, where was a gap created? Go to the 5-minute chart, and we saw that. right here in this bar, this candle, price came back, started wicking into it, and this would have been a good entry to have gotten in. You know, anywhere within that, even the bottom of that fair value gap would have been a solid place to have gotten into the trade, but maybe a little higher, and you could have, you know, saved yourself 15 minutes, you know, with this trade by not having to be in it so long. And that would have been the trade right here. 5, 10, 15, 20, 25, 30, 35, about a 40-minute trade, which would have played out smoothly. So there was multiple trades today, guys. I just wanted to show you guys that I'm going to document my trade now. Let's do the 15-minute chart. And, you know, this was the actual trade right here, but I'm going to do what I did. And, you know, there was multiple trades that could have played out, and I kind of want to just do the actual like trade I think would have played out best was at this Asian session low. I'll do 2 trades, one at the market open, and then this trade right here, 50-point stop, Asian session low. It would have had to use a buy limit order because it tapped it and rejected automatically. A 1 to 3. That would have been a better, smoother play. Let's actually go to the 5-minute chart, and I don't have to cover Asian session. I do want to do this though, right there. Where's that previous day low? Right there. Okay. I'm actually going to bring this a little bit this way. Previous day low right there. Asian session low right there. And this previous day low, bring it back a little bit. Okay. And I'm going to get rid of this fair value gap right there because it didn't make sense. And I can see now that it in fact there's 2 solid plays, actually 3 right here. Another 50-point stop to have caught a 1-up. It did tap that Asian session high, so I will leave it right at that Asian session high. There was multiple trades that could have taken place today. I do want to write fair value gap 5-minute. And I'm starting to see that these are high, you know, probability trades that happen based off of the top right. Okay, we'll leave that right there. Okay, so we can see that price came back into this fair value gap. I'm actually going to start writing text out for these trades. 9:45 a.m. 5-minute fair value gap. And journaling is so important, guys. You guys have to understand this is like going back and just doing some self-reflection is so important. Athletes do this, like professional athletes review their practice sessions and their actual game sessions. So every high performance sport, they tend to do this because it's gonna not it'll help you like become a better trader or a better athlete or a better professional at that, because this is a business. This is, there's people trying to get that edge over you, and this is what's gonna, help create an edge for you. 945 fair value gap, bearish volume down to downside, waited for retest into 5-minute fair value gap. That would have been a clean trade right there. And then the other one that I want to do is another text box down here, and it's going to be the trade entry was at the Asian session low, aligned with the 38% fib continuation level, targeting the Asian session high. Was there a big oh yeah, look right there, guys. What do you know? I should have known. The 44,200 level trade entry was Asian session low, big fig continuation at the big figure level, at the big figure level, 44,200, targeting the Asian session high. Okay. Targeting 1 to 2s, targeting R to R of like at least a 1 to 2.5. That would have been a solid trade. Okay. I want to just move this a little bit more this way. Move this way. And do some arrows, because I want this to know that it was for this one, and this one was for this one, and the same for that trade. From this point, we're going to then just copy the image, go to TradeZella. Now I've had 2 winning trades and 2 losing trades. My winning trades are about $200 each, and my losing trades are about $100 each. Today's trade had some slippage. It price came down really quick. Although I had my stop loss at $95, you can see that right here. By the time my position closed, because of a thing called slippage, my order didn't fill until a lower price for the stop loss to activate, and it activated at $107.48. That's essentially 7, 8, 9, 10, 11. That's almost 12 points that it slipped on before my order actually activated, which makes me regret not just moving my stop loss to break even, or at least moving it halfway. So instead of risking 100, I should have risked 50, and I would have been like right on the dot, because as soon as it got to a certain point, the price fell. And I could show you guys that. Right here. So my trade lasted, because I survived this. It came up, I was in profit, break even essentially, and then it came up and then just slipped right here. And you can see that wick happened in like a minute, and that's where the slippage happened. So we're gonna do daily journal. Today's Monday, add note, and we're just gonna paste this, because from here I can see what I had written down. Yeah, and it barely got that text right there, which, yeah. Okay. So from here, I'm not gonna type anything. Okay, if I do, it's gonna be something along the lines of B plus trade entry and B plus risk management. I had a hunch it was gonna like try to come down and sweep those Asian session lows, which was damn close near my stop loss, and my stop loss did get rammed by 15 points. So I'm gonna write be more patient and wait for the multiple confluence areas to get hit. If the higher probability area doesn't get tapped into to activate the limit order, then no trade day. There will always be another day. Okay, thank you guys for staying with me. I want to just say thank you for paying attention to this. And what I want to ask is if you guys could please like, comment, subscribe. I'm trying to build a following of other individuals who are taking that journey or who are beginner traders. I've been trading for 5 years. The first 2 years was trading momentum stocks, also known as penny stocks. I looked at a lot of level 2 and time and sales windows. It had nothing to do with trading Forex or crypto or futures type of trades, looking at TradingView, looking at just the price action of charts. This is a lot different than what I started out with, and I built a lot of bad habits, a lot of FOMO, a lot of just trigger happy machine gunning entries when it should have probably just been one entry for the trade and one trade for the day. Based off the account size, I know a lot more about money management, risk management nowadays, and I just want to show you guys what that looks like on a daily basis to help curve your guys' learning curve, to get you guys caught up a lot faster. I am trading a funded account. I am a funded trader, but if I can teach you guys good habits off the bat right now, you guys will definitely have a faster learning curve than I did. I learned by myself on how to do this, which is not easy. In the beginning, I wish I would have had a mentor who I knew how to trade or personally knew, so I could have avoided, spending a lot of money taking, momentum penny stock trading courses. Plus, I would have saved myself from funding live accounts, $2,000, $600, $800, when I could have just taken funded combine accounts through prop firm trading challenges. I wish I would have done that right off the bat, or practiced in a demo, journaled for and back tested for about 3, 4, 5 months before going into trading prop firm challenge accounts. If you guys can do me a favor, subscribe, like, comment, ask me a question. I can help you guys out personally. Link up with me on Instagram, Martin Day Trades, or my personal, I am Martin Gonzalez. So let's cook on these charts.